If you guys remember the very first time that you heard the term sector allocation, it probably just confused you. In this particular video, we're going to walk through the 10 sectors and what your recommended exposure is going to be. And for you guys that are new to the stock market, this is going to be really, really fun for you guys. At the end of this video, honestly, you're going to be able to teach this stuff because nobody's really talking about this. This is the stuff right here that you pay a financial planner for when you go in and discuss sector allocation and how you can best deploy your money into the stock market in the most strategic manner. And what we're trying to emphasize here is a broad-based exposure to get what we all consider diversification, all right? Now, each of these pies that I have reflected here, there's a few guiding parameters that I just want to kind of offer to you guys to keep in mind to help to keep this information very, very elementary, very simple. Why? Because it is. It's simple. I've understood this stuff for years, but for somebody that doesn't understand a whole lot about the stock market, at the conclusion of this video, you're really going to understand what it means to be overweight or underweight or equal weight. And this really helps kind of demonstrate how it is that I can visually put the sectors in front of you guys and understand how we take our circle that represents our investable capital and split it up to make sense within a tax-protected portfolio. And this is really just the sausage making. It really is. This is where something that is very confusing. If you told somebody to build a portfolio, you would find all the time that beginning investors really are very, very confused by that prospect. And this is where you start to break down, focusing in on different pies within the portfolio and understanding a recommended percentage of each of the sectors that are represented here on what you're trying to aim. Now, we've already talked about the sector-specific spiders. So for example, when I start out with a technology pie and I earmark an allocation percentage recommended at 19%, you guys can meet that 19% in a lot of different ways. And a lot of you guys are going to hit me up and say, well, can I fill my portfolio up 19% with just single stock? Yes, you can, all right? But single stock is not going to ensure that you're diversified across your portfolio. I think for new investors, the very best way to enter into the stock market is either through a passive total stock market index, whether it be the VTI, Vanguard's total market index, which covers large cap, middle cap stocks, and small cap stocks, and you'll own the entire market. Or you can do the sector spider specific ETFs and just go ahead and gain your exposure that way by putting your dollars to work at a 19% clip in the technology sector. And as you can kind of see here, guys, I broke this up into quadrants. I've got 3 in this quadrant, 3 in this quadrant, 2 and 2. So it makes it very, very simple to remember. There's 10 in total. The 11th sector that we're not going to talk about during this video is real estate. And again, we've offered solutions to provide you exposure if in fact you desire to seek out some real estate exposure. You can do that through the sector-specific ETF that's offered through Vanguard, and you can go ahead and add that to your portfolio. And finally, these percentages are not hard and fast. I know I'm going to get hit with this. Where did you get this information? This information is available through most of the brokerage houses, but they won't offer this information really free of charge unless you go in and become a client with them. I'm offering it to you guys because you're part of the independent investor community, and this really, really helps set a framework or some guiding principles so you can kind of understand, instead of coming to me and saying, Ryan, how much exposure to the technology sector should you have? How much industrial sector exposure should I have? These are the guiding principles right here that answer those questions, and I love to deliver this information. I know there's a lot of people that are new to the channel that are interested in my message, and they're sitting back waiting, okay, Ryan, I'm ready, teach me. I want to learn how to invest. And if you're in your late teens or your early 20s, and you can get this stuff right and really understand that if you're walking into a Home Depot, you know what sector that belongs to. If you're looking at a Disney, what sector that belongs into. This all plays into this framework when you're looking to build a portfolio and allocate your money properly. That is what this is all about. And we always start with the circle. The circle is the most simple analogy to represent your guys' investable cash that you're looking to put to work. And a lot of people will just look at any set amount and just wonder how to go about do it. Well, this is how we go ahead and do it. And I've broken this down into quadrants here. So we've got technology, utilities, and materials in the first quadrant. Technology really being my favorite. These are going to be the companies that you recommend, that you recognize. You know, this is going to be your Apple Computer, Cisco, Intel, Oracle, right? Your really good technology sectors that are really on the cutting edge of where you want to be, and not to overexpose in this portfolio. The recommended allocation is at 19%. You go up to utilities. This is going to be your sector that's going to deliver your slow growth. A lot of these utilities names pay a nice, healthy, above average dividend. And in the sector SPDR specific ETF here with the utilities, you can own them all. The VPU, you guys know that I own in my portfolio for this very reason, and I'm pegged right at 3%. I've got my exposure, I will win, I'm not over levered, and I'm not under levered. I'm right at 3% of my total overall holdings. We move to materials. Guys, this is stuff that a lot of people just don't talk about. It's very easy to overlook these smaller sectors. If you're interested in some of those companies, right, your DowDuPont, some of those awesome companies out there, Praxair, right, never gets talked about, that can get it done for you at a 3% clip. And as we kind of work around here, two of the most important sectors in healthcare and industrials. You look at this block here in healthcare, that's your Merck, Pfizer, Abbott Laboratories, you know, that's your that's your Johnson & Johnson right here at this 15% exposure level. And this, again, just kind of gives you that guideline of how much money you should be looking to allocate to healthcare, and then industrials, of course, man. You've got your Boeing, your 3M, you've got your Caterpillar, your Cummins, all those. And again, with the sector specific ETF, you can really take a lot of the guesswork out of it and buy that instant diversification by putting 10% of your money here in industrials. And as we work around the pie here, one of the most important, one of the most beat down sectors right now is financial services at 17%. These are going to be your larger banks, your regional banks, some of your smaller banks, some of the financial services, some of the alternative products are going to be part of this sector-specific ETF. Very important at 17%. And then we work around here under the consumer staples. You've got your companies like Costco, Estee Lauder in the consumer staples at 8%, right? So we're never too over-levered to one particular allocation. And this is the problem that I have with stock picks, right? You'll throw out 3 stock picks, and they may be 2 out of the 3 may be the same sector, or you throw out, stock picks that are growth picks for 2019, and people are looking at it and they're saying, good grief, what do I do? Am I going to abide by some level of rule, or am I going to automatically over-lever myself to those particular names? Very, very dangerous. That's why this set of guiding principles is very, very important to understand. And as we kind of work around to the last quadrant here, we've got energy. Energy is one of my favorites. Right now, it's down. Brent crude looking at about $50 oil right now. It's come down about 25% from its highs this summer. Energy right now recommended about 7%, right? So we buy the sector-specific ETF. Maybe you want to buy a single stock in here as you build this portfolio up. But we're looking at fundamental, foundational portfolio building here, and these are kind of the rules of recommended allocation. We've got the communication services sector, which is the newly formed sector, not too difficult, so they increase the percentage there to about 9%. That's your Google, your Comcast. Disney has been replaced into the communication services sector. So if you own that SPDR ETF, you're getting your exposure to those great communication services companies, Verizon, AT&T. Those are all part of this, communication services. And finally, the big behemoth, the consumer discretionary, one of the most important sector allocations that you can have. That's your booking holdings. Dollar General, Lowe's, Starbucks, TJ Maxx, Tractor Supply, they all fall into this consumer discretionary. And you could never go out and buy enough single stock to satisfy a holistic sector allocation that you can get through the Sector Spider ETF. Guys, this is really the nuts and bolts of it. These are not hard and fast rules. They are just guidelines to be adjusted to where you see fit. But the beauty of the channel is to give a framework and a backbone to start from. So you can say, you know what, Ryan talked about a 19% recommended. I actually don't feel comfortable investing that much in technology. Or I kind of want to bump that up a little bit and maybe go 25% in technology. You can absolutely do that, but at least it gives you a framework to know how to sequentially break down information and put your dollars to work with a strategic plan in mind and not just throwing darts at a dartboard hoping for the best. Guys, thanks so much for tuning in to this portfolio allocation video. You should be able to take and teach along these principles now, man. The information is yours. I provide it to you guys with full visibility, and it's just aimed at helping out those new investors that may never had it explained this way. And now that you've had it explained, you can be powerful in building a holistic portfolio that covers all of the sectors. Guys, if it's your first time tuning in, I would just ask you to consider subscribing to the channel, man. You want to hit the subscribe button, hit the thumbs up button and the notification bell, man. You will be notified on my upload schedule, guys. You want to leave your comments at the bottom here, and definitely share this video out there, man. The strength of the channel is growing in no short fashion to the strength of the referral that you guys are providing to the message that I'm working so hard to put through for you guys, so you can get this stuff right and we can start to break free from the financial institutions that seemingly only want to channel you into charging you for this information that I'm delivering to you guys free of charge. Guys, thank you so much again for tuning into the message, and good luck in your investment future.